depending upon whether you're bullish value or not, you can obviously recognize if this market was all bullish value, you can see the traps because there's the trap there, isn't it? You can see it. See the imbalances? So if I just highlight the imbalances, all of a sudden you can see the traps. See it? Imbalance, trap, imbalance, trap, imbalance, trap, potentially. So if you saw those imbalances coming away from the top edge, then of course this is telling us that these are the buyers potentially getting trapped and wondering what to do. Now the buyer's probably right. But on the other side of it, it's also potentially sellers who have wanted to get short off the top edge. That's why we said in the introduction, we want to be long. We want to be long in these markets. So therefore, when they manipulate the price, they manipulate it hard and they manipulate it fast. Why do they do that? Sammy's going to take a second thought about this, isn't he? Oh, wait a second. They're dropping it really, really hard. I better not buy it. So the manipulation is allowing them to play on Sammy's emotions. And we know Sammy at the best of times is quite an emotional sort. He is Dutch after all, not German. And, he's got emotions. So, on the basis of emotional trading, you've got to think about that from the buyers who are right, but at the wrong price point of view, and the buyers who are waiting for a buy trade point of view, and the sellers who wanted to sell into the top edge and then recognizing how great their trade is and possibly doubling into their trade and then finding themselves on the wrong trade. So we need to go through the kind of psychology of every single potential trader in that location. What are they thinking? How are they behaving? What are they feeling at that point? And the best thing to do when you're seeing these, assuming you are bullish, is to wait for one of the traps to be trapped properly. If the market keeps selling, then of course the sellers aren't trapped because they're making money. So the only time everybody's out of that trade in a bad position is when the price turns back up. So as soon as that trap reverses, for example, there, as soon as that trap reverses there, as soon as that trap reverses there, as soon as that trap in here reverses there, as soon as that trap there reverses there, you could be into and around a long position at that stage. If you took that trade, you make your monies. If you took that trade, you make your monies. If you took that trade, you make your monies. If you took that trade, you make your monies. And if you took that trade, you make your monies. No shit, Sherlock. It's kind of crazy good, isn't it, when you think about it as a process? So this is a very, very important part of the trapping process. We'll certainly cover this since Sammy's been posting it. I think it deserves a little bit of time to make sure we are understanding that as a process itself, looking at all the characters, all the traders who are impacted by what is happening there. The buyers in good positions, the buyers in bad positions, the sellers in good positions, and the sellers in bad positions. If we understand that, we're in pretty good shape.